Today, I'm talking about Rocket Lab, ticker sign RKLB. I own the stock in my 10K to 1 million portfolio that I'm building right here on YouTube. I'm going to show you that portfolio in just a second. And I think it's actually probably the stock that I own that has the highest return potential. Because I think it has the highest return potential, it actually very likely is the most risky stock that I own. And so I'm going to share exactly how I'm thinking about holding that stock as a position size in my portfolio and how I think about building it over time, because I think this is a really important concept to understand as we think about building investment portfolios. Here's the portfolio. Again, we're building this thing from 10K to $1 million. I do a full portfolio update every Friday on the channel, so just like these videos and subscribe to the channel if you want to catch all those updates and all my videos. Rocket Lab, the stock I'm talking about today, is a $5,000 position in this portfolio. Currently down about $1,300 on it, which means I've put in $6,400 and yep, we're down $1,300, so it's about a $5,000 position. Just to take a look at Rocket Lab, the stock, how it's done over the last month, down 26%. Over the last 3 months, down 53%. And over the last 6 months, down 65%. We could see that in the quarter that ended in March 2020, they had $1.42 million in revenue. Fast forward 1 year to the quarter that ended March 2021, they had $18 million in revenue, which isn't a lot when you compare it to some other companies, but that's up 1,100% year over year from that period in March. And then fast forward to the most recent quarter, which ended March 31st, 2022, and they had $40.7 million in revenue, up 123%. So we can see this is a real company with real revenue. Yes, it's only $40 million in quarterly revenue, but still they're growing pretty exponentially at this point. We'll take a quick look at the gross profit. The gross profit has grown from negative 3.7 million in March 2020 to 1.4 million, positive 1.4 million in March of 2021 to 3.74 million in March of 2022. So what does that mean? What does that gross profit mean? Well, that's how we get to the gross margin, which is an important concept to understand when we think about how much it costs to sell its product or service. And so right now, they're running at about a gross margin of 9%. This is an important number to think about as we talk about what management says the business is going to change in the future to have higher gross margin. And so we'll get into that in just a second, but that 9% number is an important number to remember. Let's jump to analyst expectations. And so right now we're looking at annual analyst expectations. These numbers are always wrong. They just give us an idea as to maybe some ranges or some ways we can think about the trajectory of the business. For this current fiscal year, 2022, they're expecting revenue. So we just talked about how they had, I think it was 40 million in quarterly revenue. They're expecting 211 million in annual revenue. That's a very real business, and that would be 239% revenue growth. But then they're not expecting it to just stop there and not be a one-time thing. They're expecting 320 million in 2023, 495 million in 2024, 818 million in 2025, and 1.2 billion in 2026. Couple things to remember. There's not a lot of analysts that cover this stock right now. So as more analysts cover the stock and as things get more predictable, these numbers will span from just being very unreliable to maybe a little bit more reliable. So I would say these numbers are pretty unreliable right now. But the important thing to understand is that they're operating in the space industry, not recreational space like Virgin Galactic, but actual launching satellites and things into space for not only the government, but private companies as well that companies are paying a lot of money for. So there's a very real business there. And here's probably the most important thing to think about for this business moving forward is that analysts expect, and management has already talked about, a path to GAAP profitability, which is actually like real profitability. And so what that looks like in analyst expectations is for this year and 2023, they're expecting negative net income. So negative 35 million in net income in 2023, But then starting in 2024, $8.5 million in net income, and then jumping big time to $132 million in 2025. From an earnings per share perspective, these two numbers are different. This is adjusted because that accounts for taking things out like stock-based compensation. On a non-GAAP or adjusted basis, they're expected to be EPS positive by 2024, or fiscal year 2024. On a GAAP basis, they're expected to be earnings per share positive by the end of fiscal year 2025. And remember, we talked about that gross margin number 9% this year. Analysts and management have talked about a path to having mid 30 to even upwards of 40% gross margin because of the different segments the business is growing into, which I'll talk about when I get to this presentation in just a second. But this is how they see gross margin changing from 16% to 25% for the full year this year, 29% 2023, and then 34%, 36%, and 40%. So if the point here is that analysts and management are expecting the business to get much more efficient at scale and to continue to have hyper revenue growth in the 50% through 2026. And so what that looks like in terms of a price to earnings multiple and a price to sales multiple, and again, these are just guesses essentially based off analyst expectations. You're looking at a forward PE of 419 in 2024, but then all the way down to 16 in 2025 and 7 in 2026. And again, the bottom line is these numbers are wrong, but we can see the trajectory and the path, and this company is still so small and still so early, and space is such a huge industry that if this company succeeds, the future only looks better from here, most likely. Moving to price to sales. Right now, it's sitting at a forward price to sales ratio of 9 based on December 2022 revenue estimates of $211 million. If we just fast forward a couple years, though, we're looking at $495 million in expected revenue, and that gives us a price sales ratio of 4. And then just, again, one more year, 65% growth, $818 million down to 2. And so you can see what that trajectory looks like, right? The price sales number just gets smaller and smaller and smaller. That assumes that this graph shows what the return could be for investors if the company hits some of these analysts' revenue expectations that I've put into this chart on fast graphs at a certain price to sales ratio. So right now we're sitting at a blended price sales ratio. So it's at about 11 right now, okay? And so if we look out through 2027, even going down to a price to sales ratio of 2.5 from 11, that's like a 90% drop in price to sales multiple. You're still looking at a 75% return or an annualized return of 11%. So let's say it trades at a price sales ratio of 5. Well, now you're looking at a 251% total return for 25% annualized return. What if this thing trades at a premium? They hit those gross margin estimates, revenue is growing faster than expected, they're GAAP profitable earlier than expected. Maybe we get a price sales ratio up to 7.5. That wouldn't be absurd. We've seen it before. Now that's looking at a 427% annualized return, or total return, and a 35% annualized. And this is just through 2027, which feels like a long time, but it's only 5 years. And then if it somehow trades at a price sales ratio of 10, which I don't think it will, it probably won't deserve, it's a 44% annualized return and a total return of 662%. And so if we go back to here, the 2031 estimate is for a price sales ratio of 0.49. Well, if it traded 10 times higher than that, at a price sales ratio 10 times higher than that, the price sales ratio would be about 5, which isn't absurd. And so again, on $4 billion in revenue at a price sales ratio of 10, you're looking at a $39 to $40 billion market cap company. And right now, Rocket Lab trades at it's about a $2 billion market cap. And so is it absurd to think that Rocket Lab could 10x or 20x from here by 2032? No, I don't think it's absurd to think that. It's possible. But this is what I want to make really clear. The more likely outcome, the most likely outcome at this point, just by statistics, is that Rocket Lab fails and loses to the market. Maybe even catastrophically fails and just dies as a company. By statistics, that is much more likely to happen than a 10x or 20x return. But I believe that 10x or 20x return is possible, which is why I have a $5,000 position in Rocket Lab. How I think about my position size and building it over time is by having whatever I have invested in Rocket Lab as money that I am okay going to zero and completely losing. Would $5,000 stink if I lost that and the stock went to zero? Yes. Would it devastate my future? Would it devastate my family financially right now? Would it make it so we can't pay our bills? Am I using leverage and margin and being reckless and irresponsible with that position size? No, I'm not, based on my own finances. And so as this company continues to execute and shows that they're able to have more and more launches and get more and more business, I'll be willing to increase that position size and invest more money. But I'm always going to keep it as something that I'm okay with going down 30%, 40%, 50%, and then potentially even 100% at this point. As the company gets more stable and has more recurring business and the space industry truly becomes something sustainable and real, I'll be thinking it's less likely it could be a complete zero and just more likely that it's going to be a volatile stock. So that's why I'm willing to say I think the stock could 10x or 20x. But just because I think that's possible doesn't mean I'm going to say it should be my largest position. I don't have the highest level of confidence in it because it's a very risky business model. And so that's how I think about that. Nobody should just follow my advice. I'm not giving advice here. I'm sharing how I'm thinking about my own position and how I think about this stock's potential in the future. None of that's guaranteed, and I know for a fact that I'm wrong, either low or high. Just don't know which one. What I want to do now is jump into this presentation and just give you the update from their latest investor conference. To give you an idea, this was on June 9th, I believe the conference was, to give you an idea of what's been going on in the business. And this is just me like open sourcing my research. Write an email newsletter, austin.substack.com, first link in the description. If you like this in-depth stuff and you want to get emails as soon as I write them, and you don't have to wait for it to come to YouTube. But if you like this video, would love for you to like it and subscribe to the channel as well. That just helps me grow here and helps more people find this. So what does Rocket Lab do? I probably should have led off with this, but they're a leading vertically integrated launch provider and satellite manufacturer. And so the important thing from this slide is that they're in 3 segments. They're in launch, and management said that they think it's a $10 billion TAM. They are the second most launched rocket to SpaceX. So again, very real market leading, provider. Their second segment is space systems, which management sees as a $20 billion TAM. That is manufacturing complete satellites and best-in-class heritage spacecraft components. And then what management thinks is by far the largest opportunity, $300 billion, so 10 times the size of their current markets, is space applications. Right now, they're in the phase of building the infrastructure and just learning from what other businesses are doing to then go kind of, fully dedicated to that in the future. This is the business at a glance. They've launched 26 of their Electron launches, which is their current kind of small launch system. They have 146 satellites that have been deployed to orbit by those 26 launches. They have 3 launch pads of their own, which is a very important differentiator for this business. Again, secondly most launched rocket. They have 3 mission control centers and 1 new large rocket in development. We'll talk about that and what that has to do with SpaceX. So, example that management used, SpaceX costs $60 million, and that's for a large launch. If you wanted a dedicated large launch, meaning go to SpaceX and say, I want this thing launched for this specific mission, it would cost $60 million. What Rocket Lab is able to do is for $7.5 million, they're able to do small launch systems that is very specific to their customer's needs. So a customer could say a day, time, and place an orbit that they want the satellite launched to, and that's what they would get for $7.5 million. Onto their current Electron system, which is their small dedicated launch rocket. So it's the global leader in dedicated small satellite launch with a 300 kilogram payload capacity. They've got 3 launch pads. It's the second most frequently launched rockets, and they have 132 launch opportunities every year. One of the things management talked about in this presentation was that the risk of these launches for their customers, and for example, if Hawkeye or Kinesis or Black Sky or Synspective, if they're putting a lot of their future on the line by trusting a launch provider with launching their satellites or their devices, then that provider has to have a track record of success. And so in a way, that's a competitive advantage, because all of these years and all of these launches that SpaceX and Rocket Lab have done make it harder for a new company to come in and start taking market share, because they've got to get that experience and get those launches and prove themselves before businesses are willing to trust them, essentially with their livelihood. This is pretty huge for the potential margin of the business. They are trying to develop the first reusable small rocket so they can launch, catch, and repeat. The first stage booster is the most expensive and time-consuming part of the rocket to build. By catching theirs with a helicopter as it returns to Earth, then launching it again, they aim to increase launch frequency and drive down costs. They demonstrated successfully catching Electron with a helicopter as it returned from space. They completed 4 ocean splashdowns and recovery of 4 Electron boosters to date, and they successfully launched pre-flown components. So management was very specific. They don't need this for the business to survive or to meet their current goals, but it's awesome to accelerate gross margin, which would make this an even better business in the future. They are working on something called Neutron, which is the Constellation launcher, the new large rocket in development. And that management has been very vocal that that's a SpaceX competitor. They expect it to be ready by around 2024, and it's a huge investment, $200 million. The Neutron is huge for their business because they see that 83% of small satellites launched by 2028 will be Constellation missions, meaning larger payloads. This is about that $143 million contract that they earned from MDA to design and manufacture 17 spacecraft for Globalstar. And so those are like half-ton satellites, about the size of cars, not just some tiny, little component. They were awarded the contract over established Tier 1 prime contractors in a very competitive bid process. They weren't the cheapest option, which is great, showing that they have some pricing power. And that reflects a deliberate and well-resourced strategy to grow Rocket Lab Space Systems business, continue moving up the value chain by providing an end-to-end space mission solutions, kind of like they talked about in those earlier slides. And then on to space applications, just a little bit on this. But again, this is just about moving up the value chain to more and more valuable services and segments. Essentially, they're saying here everything that they're doing in launch capabilities is providing the vertical integration across launch and space systems that give them a competitive advantage in the space applications market. So because of what they're doing in launch and space systems, even though not as profitable, that's what gives them that advantage to get into that space applications market. So they're in a unique position to complete the final move up the value chain to provide data and services from space, further unlocking the total addressable market. So that's essentially just entirely new capabilities in industries and services. Essentially, you could think about like a subscription service provided to some business or government agency or something like that they're able to run through satellites and provide data collected from satellites. That's the type of business that they're talking about. And I mean, that's a real thing and a huge potential in the future if we just look at the way governments, including the US government, are investing in space. And so just here's some notes on the Q&A that was at the end of this section. But they were asked about the business's competitive advantage. And so the answer, they referred to that MDA deal. They say it shocked the industry and solidified Rocket Lab in the big 3 or 4. They weren't the cheapest, and Rocket Lab can guarantee schedule and specificity due to their own launch pads, which a lot of other companies cannot. Launch is very lumpy. We've seen that in their business results. There's a lot of customer delays that just come from last minute things that might come up as they're preparing for launch through testing or whatever, just to be expected and not really a sign of weakness in Rocket Lab's execution. It's just kind of the nature of the business. They were asked about new opportunities after that MDA win. And what management said essentially is that they're seeing more opportunities because that gave them a little bit of more credibility. And they spoke to the fact that they're putting infrastructure into their launch sites to do more classified missions, which again allows them to move up the food chain and do more things with different government agencies. They talked about kind of the evolution of the business. They said they thought it would take 5 years to get to 50-50 between launches and space systems, and they're already there. It took 5 quarters instead of 5 years in terms of the different segments of the business. They're already having conversations about space data that they didn't expect to have for 10 years. So again, it's just showing momentum in the business. They have modeled for 12 launches per year, and they've got 500 million in backlog. That's very real commitments they have with cash down for future launches. And so there's actually some predictability or at least security in the business model. They hope to get to 2 times per month as the goal. Does not require reusability of their rockets to get there. That would just be an added bonus. On the SpaceX threat, the Falcon 9, again, that's where they kind of called it the bus, but they look at themselves as like an Uber or a limo, so dedicated launch. People that fly with Rocket Lab have specific location and time requirements versus SpaceX, it's kind of more generalized. And so management was asked about key takeaways. What should investors take away from them about their business? And they want to be end-to-end in space, and they want to lead. They already lead in small satellite launch. They've hit their numbers, so they have some credibility, and they're not just like talking about these crazy unrealistic expectations. And then they've got plenty of capital in the bank, and so they're not capital constrained, and they don't fear that they don't see a fear or risk to the business running out of cash at this point. I hope this provides some structure around how I'm thinking about building positions when I'm very excited about the growth potential in a position, but also very aware and realistic about the risk. There's not a lot of people talking about that on YouTube, and I just think it's a good thing to add to the discussion. So again, would love for you to like this video. That tells me that I should make more of these types of videos, and then subscribe to the channel and just help me grow, and I'll be able to provide more videos like this for longer.